So if you ever had perfect entries but it's still lost, it's probably because you ignored higher time frame bias. So if you're a new viewer, welcome. My name is Ali. I'm here to document my trading journey. And if you're a returning viewer, you should be excited because I got the mic. No more horrible sound quality. So let's get right into it. So a couple of things I'm gonna mention in this video is first of all, higher time frame bias. It looks like most of everyone who follow me, ask me question, it all it all evolves around not understanding the direction and the higher time frame. So I'm gonna make a quick video about that, trade recaps, and we're gonna end it uh, with the community and how you can join. And by the way, if you've been following the recaps, the challenge account is passed. So now we have the account. Now whatever we gain on this account, we can cash out. So on this $25,000 funded next account, you can usually request a payout after the 3 days, as long as you meet 40% consistency rule. It's not important right now. Let's get right into the video. So let's see, start anew. Let's start here. So this is what I usually look at. So let's go to monthly from the higher time frame perspective. Let me just zoom in. There we go. You should be able to see that better. So every time we have some sort of indication, I always mark my charts. For example, I put this one here like this, and I put that monthly indication because it's really important. The institutional orders always react off certain level, and you'll see what I'm talking about in a second. So we go to monthly, we draw a line. For simplicity, I put an MI for monthly indication. Oh, and if you don't know about the strategy that I'm talking about ICC, indication correction continuation, and the entry model is CCT, candle continuation theory, and we'll go about that. So candle continuation theory is pretty much two candle closed consecutively. You draw the line, you wait for the second days or the second hour price action to come hit that monthly indication, and it goes up. As you can see, times are fractal, and it plays out on the monthly level as well. But it's good to mark your levels as a monthly, weekly, and daily. So let's say this is your monthly, this is your weekly, and you don't have to do it every day. Once you do it one time, you cannot know because you color code them. And same goes with this one. For example, you can do this, and you can put it like that, and then I have it saved, so I put weekly indication for that one. There you go, that's my weekly indication. But since we already took this weekly indication and went above it, closing below it, I don't really need it, so I just get rid of it. I left the monthly indication because we never closed below it. So daily, and daily, I don't really care about all of about all of these. I only care about like the most recent price action on it. So I put my thingy here, name it, oops, not that one, daily indication. There we go. So I say daily indication. So Sunday afternoon, Asian Open, this is what I'm saying. So I'm like, okay, we close below this on Friday. The price most likely gonna come back to this area before going down to take out this level. So it went down to 1 hour. As you can see, this is where we are. So the market opened. I was looking at both NQ and gold yesterday. So I took one trade on gold. I didn't take any trade on NQ, and then I took one trade this morning on NQ. But the price action was very clean for Asian Open for both gold and NQ, and also for New York Open for both gold and NQ. And I'll show you what I'm talking about. So the first 2 hours open, we have our We have our indication here. I'm just gonna mark it green. So these two closed above one another, and from higher perspective, we already know that, hey, we had this indication in this area. We had this indication. We went below it. So now we have to come back above, or at least hit it before we continue go lower than this level. I believe I almost took this trade, but I didn't. I think the reason why I didn't take this trade because I was on the goal last night. So yeah, you could have taken this trade, a quick trade. So stop loss goes there, or somewhere around here. You can target the daily indication. Put it on the hourly. Let's put it below this swing low. There it is. And that's if you wanted to hold it overnight. You didn't have to. You could have just technically you could have just entered here and sold here on this swing, on this most recent swing high. And if you go to 1 minute, if you're scalping, it's pretty simple. Wait for it. We close above it. Flip this candle. You enter here, stop loss here, and you just target the most recent swing high, or this one or this one. Both of them go ahead. That one go ahead. That one go ahead. There you go. Boom. Just like that. So you can kind of get the idea of like you can either swing trade it or you can hold it longer, depending on what you do, if you're trading a CFD account or a futures account. So there is that. And this morning, if you came down to the price, so we went above the daily indication, and we know we have to go back to this area. So this is our target. This is our liquidity. This is the target in this area. So based on the that was a horrible drawing, but so we are right here. Right here. The price has to go above the POI. And then we just get in and we target here. That's it. From here to here. Simple as that. So there it is. Boom, boom, boom. And there you go. So we closed below it. We engulfed this candle. We inversed this. And then this candle is also bigger than this candle. So you could have technically got in here even before the pre-market open. Around 925, yeah. You can just get in here. I'm gonna show you my entry. Let me see. I think my entry was somewhere around here. Yeah, my entry was right around here. Another like nugget I can show you. So this morning I woke up a little bit late. I was a little bit late to the charts, but as soon as I was right around here when I saw the price action. But I knew we were gonna hit this area. So I was like, let me just wait until another pullback before I get in. And the indication correction continuation applies on the lower time frame as well. So let's say you had this massive downpour of the price action. So you have two set of entry level that if you hit, it works perfectly. You can set a limit order. For example, this is a little bit more advanced. So let's say we have this fair value gap from here to here. And you draw the line from the most recent swing low that the price closed below it. You just draw your line. If you're too scared to set a limit order, you can just wait to see if price reacts off that level. And as you can see clearly, market opened, we dumped, we draw a line, we draw our fair value gap. The price went up. It's so beautiful. It's like A++ setup. The price rejected. Sometimes I even set a limit order, and I had a friend of mine looking at some of my order one time. Is like, how do you top tick these orders sometimes? And I'm like, because price does the same damn thing almost every day. That's why. But you don't want to do that if you're a beginner. If you haven't had that much experience, you kind of wanna wait. That's what pretty much confirmation is. Confirmation is waiting to see if your idea is correct. And when you see price reject this level strongly 3 times, then you get in here. You can get in here, it doesn't matter. And guess what? It's just continuously gonna do the same thing. Like, blow your mind. Look at that. Look at that. This is ICC in 1 minute. Indication, correction, continuation. It's beautiful. Same thing. Indication, correction, continuation. I believe I ended up getting some around here with like 2 or 3 contract. Put my stop loss here. Put my take profit was somewhere around here. And when I'm scalping, I'm looking at what the price does. So the price went down, rejected strongly in this area. And what I did, I moved my stop loss a little bit lower. And I waited for the next candle. Price went down, rejected. It's extremely strong. So I was like, okay. Then I put my stop loss right here. And the reason why I did that is because now this area became a point of invalidation. As you can see, there is no fair value gap. There is no swing low that need to be taken. This was the last time that the price took. If this is the direction, we shouldn't come and visit the most recent swing lows and take it out. And let's see what the price did. Price went up. Look, and the price does the same damn thing. Let's say you mark all these levels. You mark this one. You mark this one. And you mark this one. Look, it does the same thing over and over again. Price came down to this line, to this line, to this line, and rejected. It's too simple. It's too easy. It's too good. See? So the price does the same thing on the monthly, on the weekly, on the daily, all the way down to 1 minute. It always does the same thing. Once you realize that, and once you understand the higher time frame direction, then it becomes too easy. So once we were like around this area, then I moved my stop loss right here on the most recent swing high. So if you have an account that has a trailing stop loss, if you have an account that you're extremely in a drawdown, if you trade it like this, dynamically move your stop loss, you're going to see a lot of success, and you're not gonna blow the account. Even if you're wrong, I could be wrong. The price can easily come back up here and start like reversing crazy. But I don't want to take the risk off the table because I'm scalping, I'm not swing trading. With swing trading, you have to have a little bit more room. But if you're trading like this, you want to like constantly de-risk it on a 1 minute candle. Once we were around here, I believe I moved my stop loss right here, or like somewhere around here, because I was like, we may still come and take this, and take this, and then continue lower. I think that was my thought process. And there it is, we hit it. And I was done for the day. That trade helped me pass the challenge, and I was good. And some people may say, well, why did you get right in the middle? I got in right in the middle because I was confident about the direction of the market. If you're not confident about the direction of the market, you shouldn't. You can still wait for your thing. So let's say you completely missed this. You're like, okay, you had your daily indication, this is an hourly confirmation. This is a big confirmation. You're like, you know what? We had this confirmation. We're probably still gonna go hit that level and go even lower than this. So why not? I'm gonna mark my levels and see from which level it's gonna get rejected. You do this, and then you go down to your 1 minute. This is the most recent one. And then you say this. I don't think the price would give you any more opportunity. Oh, there it is. It gave you another opportunity. So let's say the price came here, rejected this line, or you could have just set a limit order in here. You can just set the limit order right here. And once I'm in the order, I put my stop loss in the most recent swing high. It's like one way you can do it. And once you're this low, you just move your stop loss at break even. Once you're this low, move your stop loss to this most recent swing high. And there it is, you're done. Hopefully that extra detail helped those of you who are in drawdown and those of you who are a little bit confused about the higher time frame direction and the price action. So let me go over the gold trades that I was taking. Look at trades on look at gold. I have my weekly indication, I have my daily indication. Kind of something similar. So let's go to daily. This was Friday, so let me see. Boom. Okay. So this was Friday. We closed above this. I draw my line. I went down the hourly. And I just waited for Asian market to open. This was the first trade I took yesterday. So this one opened, I believe. And I think I went and took my trade on this one. I think I put it right here. We closed like right above it, sort of. And I went down to 1 minute. So yeah, we close above it. I just wait for it to come back. There we go. We'll close below it. We'll close above it. I still don't get into this trade. And the reason why is because we haven't flipped this candle. There's no fair value gap. So remember the entries from my previous video. Inverse fair value gap or engulfing candle within closing within the line. which I could have entered this trade because my intuition was telling me, hey, get in this trade. But I still waited for extra confirmation. There you go. So now we flip this candle. So I got in here, put my stop loss right here, right below this swing low. And my stop losses are extremely tight. So even if I'm wrong, I can be wrong like 10 to 20 times before I blow a count because my stop loss is so tight. And I believe I just marked this most recent swing high on from Friday. When I got this one, we were going up, we came down, we were going up. And then I believe somewhere around here, once we broke above this one, then I moved my stop loss right below here. Because I was like, we have this gap, we have this tiny gap, we may come down around here and then go up. So I moved my stop loss. Once we were here, move my stop loss to this most recent swing low. There it is. Done. That was like a 10-15 minutes trade. And if you have like multiple accounts, you're done for the day on an Asian open. And you can just go and have fun for the rest of the day. There you go. And this morning, just the price action on the opening, on the Asian open, it was beautiful. And the price action on the morning, it was A plus. I just needed one trade, so I just choose to take the trade on NQ. But you could have taken the trade on gold, and it would have worked out. So let me show you where we were. So around here, another thing about higher time frame understanding or the bias, if you see a rejection level from a certain area multiple times, we are most likely going to hit the most recent daily indication, weekly indication, or hourly indication before we go up. It's very most likely. And guess what happened? Look, in this entire area, in this entire region, rejection, 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 rejection. So many rejection. That's why I always preach, trade what you see. Trade what you see. Look, I even left my marks from this morning. But since I took the trade on NQ, I didn't need this trade. So I was thinking, when the market opens, we're probably gonna dump. So we obviously dumped. I marked my level because we closed below this wick and below this wick. And you could have taken this trade. And you just wait for it to come back to that level. There it is. We came back to that level. We closed below it. I actually saw this trade. I don't know why I didn't take it, but I think I was just barely waking up. I was like, nah, I'm gonna wait for New York Open. I'm gonna take a trade on NQ because NQ looked good too. I was spoiled for choice. So you can just sell here, put your stop loss right here. Look how tight my stop loss is. Literally 29 ticks. Even if you put it here, it's still 100 ticks. It's nothing. But if you're scalping, you want to like have a tight stop loss because the win ratio is so high and the take profit is so high. You can even target all the way down to daily indication. I believe you end up hitting that daily indication by the end of the day. So I'm gonna play it out. So yeah, right here. When you're right here, just put your stop loss in this most recent swing high. And there it is. So if you're wrong, just come back and it'll take you out. And you can have another entry. And then I zoom out. I'm looking at it and I'm like, we came to this area and rejected it very strongly. I just get in again. There it is. Just a quick demonstration of how I move my stop loss. There you go. That's it. So we mentioned the trade recap, the higher time frame bias, and what else I need to mention? What was I gonna mention? Trade recap. Oh, the community. So if you're trying to trade clean, keep things simple, stop forcing trade, the community is down below. I'll leave it in the comment. I'll leave it in the description. And this community, we launched this community yesterday, and it already has 169 members. It's crazy. I'm gonna add more content to the classroom. This is a community, people living their trades. I leave my trades in there, and people just helping each other. It's crazy. Like this is like less than 24 hours. We already have that many community members. People talking. Everybody is learning from each other. It's awesome. Yeah. And we have some leaderboard. I'm gonna add some cool prices if people hit certain level, and the community members are from all over the place. That's cool. And that's it. And what else I was gonna share? That's it pretty much. I don't think I left out anything. Sorry if this video was a little bit longer than it had to be, but I had to break down a couple of things for the people that needed it. Yeah, join the community, watch the next video, and love you guys. Peace out.